Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook on the daily, weekly time frame. So a big dip in the market today. The tech sector seeing the first consolidation that we've seen in a couple weeks, but the bulls were ready and waiting to buy this dip aggressively. We had oversold hourly RSI levels that had us looking for bounces, and they played out significantly into the end of the day. So Apple has a new benchmark in terms of a higher low. Previously, it was 62.51, and this is XLK, not Apple. So XLK 62.51, higher low, now 62.86, and a close near the high of the day. So we're just looking at 63.61 and then the high resistance of 64.02. So the bulls still in full control, still holding exponential supports, and still forming higher lows. So a nice new level to be watching to ensure that the bulls remain in full control. We do have an indecision doji, so tomorrow's pretty important. If we have a green day, we'll have another strong close above the upper Bollinger Band on the weekly, looking for continuation into next week. But if we trade flat or have a red day tomorrow, we will have a bearish reversal candlestick, and it certainly stands out after 6 big green weeks in a row closing at the highs. To have this little bit of indecision is worth noting, but again, unless we lose the daily higher lows, there's nothing to worry about for the bulls on the daily. Apple, new higher low established now, 173.14 is support, second highest close in the history of Apple, so just resistance at 176.24, the all-time high, and we're either going to see a new all-time high tomorrow or likely sideways consolidation. If we were to see a break of 173.14, that would show some notable short-term weakness into next week. But with the momentum we had at the end of the day, that certainly does not seem likely. Weekly chart is all bull, closing above the upper Bollinger Band, extremely strong, no weakness in sight. Facebook on the daily time frame defended a key support to maintain its higher lows. So where we stand on Facebook right now, we have our high, low of the pullback, lower high, higher low. This is an equilibrium pattern. Support is 176.71. The higher low is 177.09. For the bulls to follow through here and see a bull break, we would have to break 180.75 to get that higher low and higher high and see the bulls head back to the all-time high. On the weekly time frame, it's been a little bit more indecision here. And if you just compare 5 names, the tech sector names that we cover the most, Apple, Amazon, Google, Facebook, Netflix, the clear leaders in terms of aggressive bulls buying the dip were Apple and Amazon. We had Facebook was right in the middle in terms of aggressive buying, and then Google and Netflix were the weakest. But Facebook on the weekly time frame, you can see a bit of indecision. The bulls are holding up just fine. We're just not seeing the explosive bullish momentum that Apple and Amazon have. That's okay for the Facebook bulls because they're keeping held up. As long as those 2 names stay strong and run the tech sector and keep the tech sector strong, the Facebook bulls are certainly going to be sticking around. So close at the high of the day. All about a couple resistance levels, 180.35, 180.75. We'll see if the bulls are able to break those levels to end the week. That would be an extremely bullish end of the week. Otherwise, we're just going to be watching next week for a break of this tightening equilibrium pattern. I appreciate you tuning in, and we will see you over the weekend.